Good morning, everyone. Welcome to the European crossover webinar. And we've seen the dollar continue to go on and pair back, coming in close to what's the 50% on this pullback. We've seen a bit of risk on overnight with the story about talks expected for October. So that's allowed the dollar to go on and come off a bit more, allowed for risk on to move. We've certainly seen the S&Ps move higher. But you can see here, potential to go on and dip in lower here, come in around this 98.29 now. This is a good area here just beyond what we had, the 98.44. But we said we can possibly get a little bit of an overshoot. We'll see if we can touch a little bit lower in here. It may get us down to about 98.28. Looks like a pretty good solid support zone there volume-wise, which will also confluence with the 98.29 to 50% here. We'll take a look here on in Asia. We got the word about potential for new talks for October, and that saw the S&P just scramble up. Basically, I think it was about 28 ticks at the time. We've come off a bit, but I think some people got smoked in that particular situation. A bit came a bit unexpected. We also saw the boon come off quite a bit. You can see here quite the fall here in the bun here. And we'll see, and certainly I mentioned this in Asia, would be supportive for the euro. And we have seen the euro move higher. Now, we haven't moved significantly higher, but we'll get into the main screen. We have come in close to, we have a little bit of a confluence here with fibs. $10.45 being the 50% of this move from 1163 right in here, down here, this low of 926. And then if we look further out on a little bit bigger scope, 1050 is at 38% of that same move of low, that is 1163. I mean, 926 all the way up to 1249. Nice confluence. Now we were looking for the mid 1040s yesterday, where we thought potentially we may be able to get to. We didn't come up, although in light of the news, I would have expected the euro probably to push a little bit further, although we do know that this 1053 is huge, but I thought we might make one more push initially, at least here before we, start to soften a bit. And we did see a nice little rally up in here. As far as data coming across, we did get industrial orders, German industrial orders that came out, which were certainly a disappointment, down 2.7%. So certainly going to go in and bring on that recession, 2 consecutive quarters of negative growth. That seems to be pretty much a given. And then coming into the States, we do have challenger layoffs as well as ADP employment. They're expecting, last time was 156,000. They're expecting 149. We have jobless claims, and then we do have market final PMI, and that's going to be at 9:45 Eastern, with durables at 10 a.m. Eastern. Certainly that'll have an effect on the dollar, with durables and factory orders are always hand in hand. Then we have ISM non-manufacturing. Rose polls for 54, and that's non-manufacturing, and that'll be out at 10 a.m. Eastern. Let's move this on again. Well, we did go in and see, remember we've been talking about the dollar peso to come down to 1967, and we saw us finally make it down to 1967, even dipping a little bit lower before we saw a little bit of a rebound back to what, about 1972. And you can see, but we've been looking for this 1967 the last couple of days. Initially, at the beginning of the start of our analysis, we had 1985 with solid support coming in at 1967. We overshot a little bit, but we did see a rebound up to, well, it looks like almost 1973. And certainly cable continues to press even further here. And dollar yen, despite the risk on, they've kind of taken it as a big yawn because we only made it up to 674. And if it was such a big move, I would have thought we would at least challenge up here to 709. But look, we made it up to 674, and they've kind of rotated a bit here back down. So let's take a look on the morning bid. World markets take heart from China, Italy, and Brexit. Politics conspire to lift world markets for a change. After a long torrid August, political developments on several fronts, the U.S.-China trade war, Brexit, Hong Kong standoff, and Italy's election risk have all taken a positive twist this week from a market's point of view. Global share markets were lifted overnight after China confirmed formal trade talks with Washington would resume next month, a day after Hong Kong's Hang Seng staged a near 4% rally on signs the Hong Kong Authority was killing the controversial extradition bill that triggered months of violence and street protests. Stock benchmarks in Shanghai, Tokyo, and Seoul all jumped between 1% and 2%, and the all-country index was about up 0.45% so far on Thursday. U.S. and European stocks were both up almost 1% after a 1% rally in the S&P on Wednesday. China's offshore yuan strengthened back to its best level since August the 23rd, with the dollar steadying before broadly after a sharp retreat on Wednesday. 10-year yields popped back up and tried to regain the 1.5%, and the 10-year curve flipped back to positive to turn a couple of basis points. In Britain, sterling rallied as Prime Minister Boris Johnson was defeated for the third time this week, late on Wednesday, by a parliamentary push to prevent him from taking the country out of the European Union without a deal on October 31st. Johnson's attempts to hold a snap general election before new legislation, forcing him to seek a new Brexit extension, also failed. The pound's trough to peak rally from Tuesday's near three-year low was as much as 2.53%, as traders saw the chaos of a no-deal Halloween Brexit crash ebbing. Bookies' odds put the chances of any Brexit on October 31st back down to about 30% from about 50-50 rate last month. The no-deal crash next month has been averted. The pound backed off slightly from its overnight highs first thing. The upper house is currently in the process of rubber stamping the new legislation. In Italy, Prime Minister Giuseppe Conte on Wednesday unveiled the new coalition cabinet between Five Star and the central-left PD party, with PD Robert Gualtieri named as the economy minister and speculated incoming coalition. But markets are not watching political developments alone. There are signs that the worst fears for global growth may be wide off the mark. City's economic supplies index for the G10 major economies, although still marginally negative, has risen to its best levels. But we just saw the German data, and the German data was very, very weak on the German industrial orders. Came in very, very weak. A bigger than expected 2.7% drop in July. Next week, the ECB meeting is now in focus. While there's been some speculation, the more aggressive expectations of further rate cuts and immediate resumption of bond buying may be disappointed. There's little doubt the ECB is determined to keep easing policy until it gets a traction on the higher inflation rate and expectations. And on to a plan for trade talks cheers risk currencies. China's yuan and the Australian dollar rallied after news on Thursday that the Chinese trade talks would resume. Sterling held on its gains to overnight. Broader market and the resumption of China trade talks was the main factor at play, and talks will be held in Washington in early October, the Chinese Communist Ministry said. It does seem the markets were positioning more bearishly, and now we've gotten the potential good news, and the markets are running with it. Global economic indicators that also have recently been showing some green shoots. The U.S. is still going to raise tariffs next month and December, as far as we know, said Joe Capurso, senior currency strategist. That's negative for the world economy and the Chinese economy. The Australian and New Zealand dollars and the Chinese yuan all jumped against the dollar. So let's go on and take a look where we stand right now. We are now trying to see if we can make this push here, and even the cable here. Try to push it a little bit higher and see if the dollar just can pair back. Let's go and pull up the bias chart. Well, staring us up in the face is this big level here, this 1075 right here. I think we have marked it off right there. On the 2-hour chart, I believe we have that listed as 1073. Let's get to that. This is a big area. I think they have a quite the tough time of trying to get beyond this 1053. 1073 would be the 61%. And if we move this here, this is all a very tough area here between 1053 and 1073. Very tough area for them to get past. If the dollar index does take a little bit of a dip, it gets us closer to the 50% because we did overshoot the 38%. So that's why I'm thinking we can possibly press as low as 50%. That may get us to challenge in here. And although we've got a pretty good level up in here, and this would be a bit of a stretch, I think that coming right across there, let's call it 1067. I'm going to move it right. You see that? Let's call it right there, 1067. But even before then, I think we're going to have a tough time trying to get past it. Now, once again, like I said, if we can get this dollar to take a quick dip, maybe we'll get, maybe on some data, we'll shoot beyond here. Let's say we do have ADP this morning. Maybe we'll get a shot. If we can get that extra shot here, that may jump us right into this area. But I think this is going to be a pretty good, tough little area right here. But right now, we do have Boone's a little bit weaker in here, still pushing lower, which may give us that extra push to get come into this area. But it's a pretty decent area here. But we do have NFP tomorrow. We'll see what we can do on that. And as far as support, for now, don't want to put it that close up here all the way to 1001, but certainly this market has got those bids right behind it. Um, we will go right there, 10 even, 10 even right. Oh, 1001. And let's take a look here with cable. we still have, we still have the potential to push even higher with the cable. And my thoughts are right here with this cable is that because we're right up here up against the end of the week, we potentially may go in and squeeze some shorts. Now, for those with, I mentioned in the Asian session, for those with the deep pockets, ultimately, yeah, they may play out and work just fine as we look a little bit lower, maybe have to come back down here. But in the meantime, as we get closer towards the end of the week, we may go in and see ourselves get squeezed higher here. And so let's take a look here. Initial resistance right here is going to come in right there at, that's going to be 123 even. If the dollar index does go in and take that dip, I think we can really quickly push here and try and challenge the 23 area here. As far as support, right there at 2176. You can make the case for a little bit higher here. Right there, 2180. But we do have some targets that we get a little carried away with ourselves with the short cover. You can see the Aussie dollar making a run here, and we can see here that the bias chart resistance where we're looking here is going to be the 68.31. They can push up to. And for support, actually on the 2 hour, we have it at 68.34, so let's tighten that up a bit. And for support, we right there, 67.67. Let's move on to the Kiwi. Nice rebound here in the Kiwi, but the key resistance you can see here is that, and that's a huge weekly level too, this 63.89. So still pretty tight, not that far away from it, but, and they almost made it there to the 63.89, but that will be our bias chart resistance here. Actually, it's 79, and looks like they did nick it there too. And we actually made it all the way up to about what, 84. So we came below that 89, but just a hair above which we had a resistance of 63.89. Support is going right there at 63, right there, 63.40. going to keep it pretty tight. We've seen this dollar CAD come off quite a bit, and one of the things that we talked about, remember, since the beginning of the week was this 33.36. That was even part of our analysis at the beginning of the week, and you can see here this 33.36 has really kept this level in check, or kept this market in check. And even when we were breaking higher the other day, I think that was when I was on Face on a Tuesday, and at the time I was saying, wow, we're above the 33.36. That does open the door for 34.15, but watch out here. This is a good area for some longs to take off. Some of the pairs, ensuring that we did come off. Okay, it was at 33.82. Obviously, we had some U.S. data which really took caused a hit on this thing, and certainly saw the mountain market going and pair back. Moment. But we've taken still a further dip here. And we even had remember we had some volume support at 238. The market tried to hold, but we've since broken lower. And here's that area that we had previously before, which is 3201 or 32 even. And I think we had a 3201. And see, here we go. Actually, we got 3201. And I know I didn't have that from yesterday after we already broke. I don't know why that's showing that. And as far as resistance, let's go to the 2-hour chart. We'll mark it off right there at 32.46. And let's go move into the peso. Now we've been looking for a pair back down to 1967, and mentioned this even late yesterday. Look, we're getting this move down to the 1967. We had initially started out the week. We talked about it as it closed around 20:05 on Friday, and we were saying, look, although it's bullish, we're looking for a pullback to 1985. And with stronger support will come at 1967. We saw the market kind of holding and start breaking lower. As we broke lower, this is at 1967 we've been looking for. And we made it here. We're going to go on in the bias chart resistance is going to be just a hair below that. You see right there, which is going to be 65.7. actually 66. One, we'll just call it 1966. And on the upside, 1978. 1978. Let's move into the dollar yen. Now, the dollar yen took the news pretty much in stride. I even posted a chart in the Asian session. The dollar yen was like, meh, I've seen this movie before. They're not buying the big risk off move on here. You can see here, we just pretty much kept it right here at the 676. We actually even hit it to the pip and then just rolled back down. Not a whole lot, but we rolled back down. Here's the the 674. You can see right here. Came in here, hit it to the pip, and the market's just like not impressed at all. At all. Until it takes it out, it hasn't taken it out, so it's going to be 674. And support is going to come in right there. 586. We're going to actually give it some more room, especially since it doesn't want to react to the upside. 586. And let's take a look here with the dollar index. Where we'll continue to weaken right here, you can see here. And we're getting closer now towards that 50% pair back. And there's some additional support coming right there at 98.20. From a daily standpoint, we look at 98.15. Let's take a look on the 2-hour chart. You can see that potentially we can still make this move, and you can see where I drew this zone at here. Okay, look at all the touches when we came in here. Once we rallied up here, we kind of congregated here at this 98.14. You see how we kept hitting it before we took a quick zoom, and on the way back down, we stopped right back at 98.14. And you can see here, we kind of held there before we broke lower. We came back, we congregated at 98.14, congregated some more. And look at this, look how many times we touched into this area here. So we're actually going to go in, just so we know what the downside is, we're actually going to push this down here, down to 98.14. In the sense that we don't want to get caught flat-footed. So this is solid support here at 98.14. 98.29 is a 50%, but we want to know what's the downside. I mean, not that we couldn't go beyond, and on a bigger scope, you can see here all the way back the move down to 95.85 and up to here to 99.37. 98.02 would be the 38%. Maybe we'd see that on a week NFP, but right now we want to go on. When you look at this, then you think, well, wait a minute, no, then yeah, certainly the 98.14 seems more plausible. So this is what we should see some pretty good demand come in here, 98.14. If we're going to continue to see this dollar weaken, maybe once again we get a poor ADP, that we quickly send this market down here before we jump back up. So we want to know what the risk is on this. So we're going to go with 98.14 for our bias chart support. Good support coming in here on this 98.25. So if we do take a dip, really between that 98.25 is a pretty decent area. We did take a dip right now just a couple of minutes ago. Down here, you see it's coming off these lows a bit. But we shall see if we can go and push lower. As far as resistance, right now it's going to be 98.63. With that, we're going to go to the cross rates. Okay, and let's go and take a look here. We already had a pretty nice move already here with the QE. If they press just a little bit higher, let's give it some room here. Right there. 68.12. And on the downside, 67.60. The yen's being pretty stubborn. So we're going to go with this right here, which is the 77.67. That level 1767. And support coming in right there. 1701. Let's go with the euro on. You can see here the euro has not made much traction against the euro on against the Aussie itself. Um, but if we do get the auto ease back a bit, we'll go with this resistance right there, which is going to be 62.36. Have 37, that'll be fine. And 61.78 for the support. We've continued to lose ground here against the Kiwi. Um, let's take a look on this. Still have a ways to go before we even get to the 38%. Broken down here. This shows what they would likely want to go to before we see some good demand come in here. Right there at 72.56. A little bit better move, but nothing to write home about in this Aussie yen, despite the good news. We talked about the yen basically not offering too much um, in regards to the expected U.S.-China talks. We even took out beyond this 38%. Right there, 72.90. 72.90. Right there. And be 72.09. We've been in this big range. We just barely popped our heads back above it and we'll pull back down here. And this is some nice solid support coming in here on these dips down to 72.09. If we do slide back, you'll see some nice short coming here at 72.09. Let's go move into the guppy. If we do see that sterling strength, although as we said, the yen's been stayed firm. Let's take a look at about 127% extension here. 31.82. If we get going, this is a ways up. I'll tell you what, I'm going to go right here with this 31.46. And support, going to come in right there, 29.42. And let's move into sterling on. We held this area here. We're making a stand, making a push up higher. It's pretty clear where the resistance is going to be right there, 80.50. So support there at 78.97. Actually comes in right there at 79.07. 79.07. And you can see here the euro made a bounce up in here, but we've already started to pare back a bit here. Not much, but I mean 10.33. Once again, we'll see if this dollar can make one more push lower. We'll see how ADP comes out. I think that it could be just one of those where it's a quick move, but you want to know where the downside is, in regards to the cash dollar. Now tomorrow is NFP, but I'm just saying is if we take that quick dip, it could be that dip. It could be rather quickly and just see this thing pop up, which would coordinate or coincide, I should say, with the euro in and of itself taking its own move. Maybe jumping up here if it were to jump up and take a 10.50, maybe come up to 10.57, and then turn around and pare back. I think you have to know what those levels are and just be prepared when we get that data that comes out. We do have factory orders. Let's come back in here. We do have, as I mentioned, Chandra layoffs, ADP, labor costs. I don't think it's going to make a move whatsoever. nor necessarily market final PMI. But durable goods and factory orders certainly will make a push there. We shall see, as well as ISM non-manufacturing. So you have a potential to make this bounce. I think it's still early. Market is just kind of plodding around in between these levels, but you can see a big jump, and then i.e. the euro, and then maybe pair back in. So keep an eye on those levels as we move into some of that data, although tomorrow's a big NFP. So that's what we have for today. Thanks very much for joining us, and we'll see you on the FX Daily Roundup.